Hello again, fellow BeachBum traders. We hope that you had a great trading week last week. We hope that you found our weekly game plan from last week helpful to you in your trading. Please let us know if you found our weekly game plan from last week helpful to you in the comments below. And please let us know how your trading went this week. Good or bad, what did you learn? How can we improve our weekly game plans to help you succeed in your trading? Now let's get started preparing our game plan for next week. Hello again, fellow BeachBum traders. Thank you for joining us for our weekly game plan for December 6th through December 10th, part 1, where we'll look at what happened last week, what the current trends, etc. are, so that we can prepare for and pick our stocks for next week, December 6th through December 10th, which we'll cover in part 2. We hope that you survived the wild ride, the Seesaw ride yesterday or last week, and were able to take advantage of that and make some money. Again, we'll talk about this, but we saw quite the seesaw action the past week. You know, we seesaw from, we're going to lock down, and the indices drop, the VIX spikes, cryptocurrencies go down. So we have our list of, okay, when there's fear, FUD, fear, uncertainty, doubt, we're going to lock down. Here's the trends that we see. And then the next day or 2 days later, we say, oh, it's not so bad, nothing's really changed. And now the reopening side of the seesaw goes up. So essentially we flip the switch and everything that was going down starts going up. We saw the VIX retrace. We see the indices, the markets go up, cryptocurrency recovers, gold goes down, oil goes up, and the treasury prices go down and yields go up, etc. So we'll look at this in the futures and the indices, and we'll see this seesaw action. And now that we know, we can actually take advantage and make money from this seesaw. So when we see the lockdown side going up, here's our list of things we play. When we see the reopening side go up, then we have our list of things to play. So I think we can take advantage of, work together and take advantage of this opportunity. So we'll get started and see how we can work together to do that. Okay, we'll start our recap of what happened in the markets last week. What does it mean, and what are we looking for in the coming week, December 6th through the 10th, by reviewing Jim Cramer's CNBC Investing Club recap that he puts out on Fridays. Again, I'll put a link to the browser version of this. It comes in the email. Again, I'd highly recommend that you get this if you're not already getting it, as he posts daily updates and their buys and sells for their investing club. But if we just quickly look at his recap, it pulled back, the markets pulled back on the new variant, and then Powell and Yellen were talking in Congress, and the risk of higher inflation triggered a market decline during the week. And we could see, expectations for higher long-term interest rates hit the tech sector at that time harder, and we can see a flight to safety, right? So flight to safety, people flee to utilities, real estate, communication services, consumer discretionary, and then also they buy bonds. It's a, like I said before, they flip a switch, and then that's where they go to. It's automatic. They're not necessarily thinking about it. They just flight to safety, flip the switch, go do these things, including buying bonds. So even though we know the Fed's going to taper and they're going to decrease demand. So again, you can see his strategy, find strong companies, right? Free cash flow, strong balance sheets, healthy dividends. So coincides with our longer term strategy as well, as you've heard us discuss. What we see this week? Well, we saw a pretty big collapse in oil prices at one time. Gold pulled back. We saw nat gas collapse at one point. We'll talk about that more in part 2, and when we look at the futures. And then we saw the treasuries, again, they ran the prices up and the yields down to as low as 1.3 on the 10-year. We still got some earnings, and then we can see, okay, real estate reported some positive news. Again, you can read the details of this. I just want to get a high-level recap for us for going forward. And then we got kind of mixed jobs data across the week. It wasn't necessarily all bad, but a lot of the numbers missed expectations, and so that kind of triggered some FUD, right? Some fear, uncertainty, doubt. So also we'll see inflation numbers. Again, they're kind of mixed, but overall the themes are, okay, the job market might not be as good as people had expected, and inflation's still running hot, but certain areas may be trailing off. So again, we got labor statistics data, and then on Friday we got ISM PMI data that triggers inflation, and it's still hot. And then we got jobs data that most of the numbers missed expectations, and we saw a big sell-off at mid Friday based on that. And then we still got some earnings, and then we can see a typical week for economic data. So some of the other things that I wanted to talk about from last week is there was an OPEC meeting on Thursday, and OPEC decided to not slow their previous plan to increase production. They're not increasing it, but they're not slowing it. And then Friday, as I mentioned, the big miss in most of the jobs report numbers, most of the inflation numbers higher than expected, but a lot of the commentators don't believe the big misses in the jobs report will deter the Fed from accelerating tapering and rate hikes. So that everyone believes, pretty much based on this data, that it's not going to change the Fed's plan. In fact, there was more talk this week that they're going to accelerate their plan. And their next meeting, I believe, is 14th, 15th. So then we'll get that decision as to whether they're going to accelerate their plan. So. Okay, so now we'll dig into what the markets look like, and then, how can we strategize to take advantage of that going forward. Okay, let's take a quick look at where we ended up on Friday. I'm on the home page of FinViz. You can find our affiliate link to FinViz in the description box below. We can see, the markets trailed off and then had an end-of-day bounce. All of them pretty much the same. We see everything was pretty much red except for healthcare, consumer defensive, a little utilities. You see the news as of Saturday the 4th. We can see Goldman cut the GDP forecast, slowing growth. We see the NVIDIA ARM deal looks like it's dead. We can see concerns about the variant, and then we'll talk more about the Santa Claus rally going forward. We can see, oil decline, nat gas had declined, and then, small bounce, gold had declined, and then it's bouncing up, and all the indices were down, and we can see the 10 years down at 1.3, 20 at 1.67. Again, a steep decline in the treasury there, but, flight to safety. That's Friday was a lockdown day. And so our list of lockdown themes all triggered. So if we look at the individual indices real quick, look at the SPY, see where it is in relative to its channel. We can see, it peaked up over its channel, dropped back into its channel, and then now we're starting to see that seesaw action, right? Down, up, down, up. But it's oscillating, it's seesawing around its moving average. So we're still in the middle of the channel, seesawing around the average. Pretty much that tells me we can expect more of the same, unless something changes, right? So let's look at the Qs. We're going to see the same type of behavior probably in all the indices. Yep, see, NASDAQ peaked up over its channel, came back into the channel, it's seesawing. It's kind of bouncing between its 50-day and 200-day moving averages. It's looks like more downward pressure towards the bottom of its channel, but again, this channel trend is still upward. Again, we still got stimulus, the Fed's still buying bonds, the economy's still growing, etc. So there's, not massive fear. We're just seeing this daily seesawing. The Dow is seesawing at the bottom of its channel. But again, it's just seesawing on that bottom trend line. If we look at the IWM, it got hammered because, again, a flight to safety, small caps are going to get hammered. So it had reached the top of its channel, broke out a little bit, and then plummeted. And now it plummeted down to the bottom of its channel, and now it's seesawing at the bottom of its channel. Again, small caps are going to get hammered on a flight to safety. So if we look at the VIX real quickly, we'll see these spikes and retracements, although it's still working its way up. So we see the seesaw action in the VIX, but the VIX is working its way up, and we're just waiting for a final culmination spike, and then we would short the VIX using SVXY. You probably heard us talk that we have an order out there waiting for that spike because it's going to retrace. In all the past cases, you see a spike and then a retracement. So that's how we're playing the VIX. It almost hit late Friday. Monday may be more volatile. Mondays tend to be more volatile. So we'll see how that plays out. I'll just go to the main page of crypto and we'll just see how red it is. So again, crypto's been seesawing as well because flight to safety, risk off, and people dump crypto. And the next day, okay, nothing's changed, so let's go back into crypto. So now I'm going to go to the futures tab real quick in FinViz, and again you can find our link to FinViz in the description box below, and we'll see the seesaw action, right? We see a drop and then a green day and then a couple red days and then a green day, and these all look the same, right? So that's why I said it feels like a seesaw. When we go into lockdown, the indices all go down, and then the next day, okay, nothing's changed, and they all go back up. So we can see this behavior pretty much in all the futures. We see oil really, declined, and now it looks like it's got a nice bottom. We went long USOI, which is a Credit Suisse ETN, monthly paying Credit Suisse ETN, when we saw this nice drop in oil, and we were happy to be able to pick that up. There's still predictions that oil could go even over 100, but we don't see a massive increase in supply. Demand's not really decreasing. We're not going to lock down. Biden said we're not going to lock down, but people are still triggering that fear. We saw nat gas decline, and we'll talk about that in more detail in part 2, but we're looking to go long nat gas using BOIL. Again, it almost touched our price target, and we almost went long on Friday, but very soon we'll probably go long nat gas with using BOIL. Similarly, we're looking for a little bit of a decline in gold, and we would go long GLDI, which we got stopped out. We up on this peak, we made some money, got stopped out of GLDI. It's come back down. We're going to go long at the bottom again. We're still in silver. It looks like it turned up, which is good. And then we'll look at the treasuries real quick, and we'll see the seesaw action in the treasuries. We get these big spikes on the lockdown fears. People go buy bonds like crazy, and it drives the price up, and then the next day it's like, okay, nothing changed, and it declines. As things normalize, we expect the yields to increase over time because the Fed's going to increase interest rates. So we expect those to go towards 2%, and we are long TTT, which is short the price, long the yield. So as that yield goes up, as the price comes back down, we'll make money with TTT. So that's what we see in FinViz, and I will see what other views we can get of what's going on in the market, and then we'll talk about how can we strategize to take advantage of that. Okay, now let's see what additional information we can get from the Markets tab in Webull. Again, I'm in the Markets tab on the online browser version of Webull. Get your copy of Webull with our affiliate link in the description box below. Get 2 or more free stocks. And I found this to be very useful, and I'll show you another quick tip in the Seesaw action that I found when I'm up, like at 4 a.m., looking at the Webull market open, because you can trade in Webull starting at 4 a.m. With this Seesaw lockdown reopening, if you look at the global tab here, you can see how the global markets are behaving. So at 4 a.m., the European markets are typically open. The Asian markets, I believe, have closed, or sometimes they're open, and you can see what the global trend is. So a lot of times on this, FUD days, the fear, uncertainty, doubt days, the negative days, you'll see Asia red, Europe's going red, and of course, North America hasn't opened yet, so that hasn't hit North America. So again, I find this very useful to see the trend for the day that's going to hit the U.S. markets that they haven't realized yet. So I'm making it a routine to check this global market at 4 a.m. and see what the trend for the day is. Are we locked down, or are we reopen up? So I hope that helps you. Again, find that an additional great feature of Webull. Get your copy of Webull using our link in the description box below. We can see a lot of decliners, heavily declining. You'll see the news. We could look at some of the after hours from late Friday, see what the theme is. Pharmaceuticals up. These are the gainers. Some banks up. The losers, top losers after hours from Friday. Another thing that happened last week too, I know we've said before, but I'll say it again, we're not looking at any Chinese or Hong Kong stocks because another event that drove the market down was DD delisting. China essentially forced DD to delist from the New York Stock Exchange. They are delisting and it got clobbered. We're not touching any Chinese stocks or Hong Kong stocks, so you're going to see they're going to get hammered. So if you're happy to be in any of those, please be careful. So when we can look at the best performing industries from Friday, we can see the tops again of flight to safety in general, utilities, natural gas, probably consumer discretionary, retail didn't do great, household didn't do great. If we hit the all tab, and again, we have a whole video about how to use this market screen and all the information that's available. I'll put the link in the description box again, but please see that. There's a lot of great information in this markets tab. We can very quickly get a feel. Nat gas up. Most of the things are going to be down because Friday was a down day. Friday was a lockdown day. So we see, a few things. Okay, trucking had some positive. Some consumer staples had some positive. Again, nat gas. Then we can go look at the ETF trends. So the SQQQ is short on the NASDAQ, so short NASDAQ, short Russell, short Dow. Again, it being a down day, I'm not surprised it was short long the VIX. And the industries are going to be mostly red except for utilities. Got a little communication services. Consumer defensive. So again, that's something Kramer said too. We can see that in the trends here. Commodities, coffee, I heard there's a drought. Coffee prices going up. That's a bummer. I drink a lot of coffee. Grains, cocoa, okay. And then bonds. They were buying bonds. It was lockdown day, so they're buying bonds, long-term bonds, etc. So hopefully this all helps give you a feel for the trends, the data from last week. Again, this is the Markets tab in Webull. We have another video on all the details of how to use this data. Now let's talk about, okay, how are we going to use all this data to construct our strategy for next week, December 6th through December 10th. Okay, so given everything we heard from Jim Cramer, what we can see in PinViz and the futures and the trends and the indices and in the markets tab in Webull, what do we want to strategize to add to our watch list for next week, the 6th through the 10th? A couple additional factors I want to mention. Some additional downward pressures. Again, we're talking about a seesaw, so things pushing, the end of the seesaw down, and then we've got up. Downward pressures on the indices and in particular stocks is tax loss selling. So stocks that are down big for the year, people are harvesting their tax losses, so they're selling them, taking the loss to balance out a gain. You'll see profit taking. You've got market fund managers want to look good, so if they've got something that's way up for the year, they might take profit and not risk it declining on one of these lockdown days. We also still have supply chain issues, so the fact that Asia is having lockdowns again, China, Vietnam, etc., they're having further lockdowns, that's going to cause another bump in the supply chains. So we're still going to have bumpy supply chains going forward. So anybody who's at risk of supply chain issues is going to be under downward pressure. Some additional upward pressures is the Fed bond purchases. They are tapering, but they're still buying, and that's going to go on. People are now talking maybe spring. They might wrap up their bond purchases instead of June. And then start hiking rates after that, which might be second, third quarter, or later next year. So that may accelerate, but it's still supporting the market. So when we have these down days, we still get a bounce because we still have this support underneath us. Then we have, and again, we'll talk about this probably next week, the Santa Claus rally. There's still belief out there that the Santa Claus rally is going to happen towards the end of the month, so you see people buying the dip, right, and in preparation for the Santa Claus rally. So again, that's another reason we see this seesaw action. On a big down day, the next day people say, okay, it's cheap, we'll buy the dip because we believe things are going to go up into the end of the month. The Jim Cramer show, if you watch that from December 1st, he talks about Larry Williams saying the Santa Claus rally historically begins about the middle of December, and then he says the best date to buy is it's like the 4th to the last trading day in December, or December 20th. Again, probably next week we'll prepare for this Santa rally. We'll talk in more detail about how to do that. Also, the next Fed meeting is the 14th, 15th. At that time, they were talking that the new variant might take accelerating tapering off the table, but on Friday, the commentators said they don't expect that. They expect the Fed to go full steam ahead with accelerating tapering and rate hikes. And we also we just talked about the lockdowns in Asia. So these are some of the factors to consider when selecting your stocks, your individual stocks, your ETFs. Here's the trends. Again, we see the seesaw in lockdown versus reopening. We have our list of what to expect. If it's a lockdown day, here's what we do, right? We short the indices, catch spikes on the VIX, crypto down, gold up, etc. And here's some stocks. If you want to buy individual stocks, the vaccines, travel down, you can short travel, long the vaccines. Then we go reopening, it just flips, right? So everything that was up on the lockdown goes down and vice versa. So the key is to look for what trend are we in on a given day. And again, that global markets tab in Webull I found very helpful to give me a preview, an early view on what kind of day are we looking at. But hopefully this will all help. We're now going to go decide, how to update our watch list, what stocks, individual stocks and ETFs to add or remove to our watch list, and we will cover that tomorrow. So please join us for part 2. We hope this all helps. Please smash the like button and help the YouTube algorithm share this with more of your fellow traders. If you're not subscribed already, please do so. And please hit the bell icon to be notified when we do part 2 and all of our future videos. So we hope this all helps, and have a great day. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week.